review chapter 17. But before that, I'm going to do a brief review of the contents of chapter 16. Okay. So in chapter 16, one of the most important concepts is the classification of cost, right? So we mentioned about the product cost, the period cost, right? So who can tell us what is a product cost? Okay. Your name card, please, and your laptop stop. Okay. Okay, Victor.
Product cost has to do with the cost of materials, where people have to produce it, and also the machinery.
Okay, yeah. So to summarize what Victor said, thank you. The product costs are the costs that are related with the purchasing or the production of the product, right? And then the period costs are the operating costs that are not product costs, right? So that's how we differentiate between product cost and period cost. And as I said, our managerial accounting for this textbook, we focus on the manufacturing firm, right? So for a manufacturing firm, the manufacturing cost is equivalent to the product cost. And then we further break it down into the three categories, right? So we say that we have the direct material, direct labor, and overhead. And for overhead, it contains the indirect material, indirect labor, and some other components. So, do you still remember the 3 steps that I introduced last time? The 3 steps to classify the cost. Okay, so if you remember, please volunteer to tell us. Okay, David.
First, determining whether it's a product or period cost, and then if it's a product cost, then decide if it's direct or indirect. And the third one is if it is direct, then if it's material or labor.
Yeah, so what if it's indirect? If it's indirect, then it's overhead.
Right.
So, yeah, so that's the 3 steps, right? So let me repeat. So first, we decide whether the cost is a product or period, right? So if it's a period, then there's no further category. But if it is a product cost, then we consider whether the cost is a direct or indirect. So if it is an indirect cost, it falls into the category of the overhead. And if it is a direct cost, which means that you can trace back this cost to each product, then we further consider whether this cost is a material cost or a labor cost. Right? So if it is a labor cost, it belongs to the direct labor, otherwise direct material. So if you have done the homework, I guess that the 3 steps that I just mentioned should be very helpful for your classification of cost. So that's the first important part of last chapter. And at the very end of last class, I introduced how we calculate the cost of goods sold for a manufacturing firm, right? So this flow chart is showing the cost flow within a manufacturing firm. So basically, we need to have direct material as input in the manufacturing process, right? And then we need to add the labor and some overheads to convert the raw materials into products, right? And then in the process of making the products, we call the product that are in the process of manufacturing but has not been completed as work in process, right? And then after this part has been completed, it will be moved to the finished goods. And then after we sell the products, we expense them as the cost of goods sold, right? So that's the procedure of how the product costs flow in a manufacturing firm. So to get the cost of goods sold from this chart, it's obvious to see that we need to decide 3 components. So the first component is how many direct materials are used, right? Are put into the procedure to make the working process. So that's the first step in generating the cost of goods sold for manufacturing firm, right? So if you, so do you still remember how we get the direct material use? So what's the formula for that? Okay, try to speak up because today is a good day, right? It's very warm outside, so everyone might be sleepy, and I also feel sleepy, so just speak up. Isana.
I'm sorry, I wasn't here.
Okay, so the rule is that you can call anyone in this class as a revenge.
Sorry.
You can call anyone in this class to answer for you as a revenge that I called you.
Oh.
Yeah.
You?
No, not David. He already answered some question. Yeah. Choose someone in the back. It's time to test your friendship. Okay, your name, please. Name.
I'll put it down so everybody can.
Yeah. Okay, Usama. Yeah.
You're
So how
gonna
do you,
have to ask me the question one more time.
okay, never mind. So how do you get the direct material use?
Do I still get revenge or no?
Yeah, you can, like, this goes on and on until I say no.
Alright, but who knows the answer?
Yeah, who knows the answer? I will tell you no.
I'm calling that young lady.
Okay, Dima. Yeah.
Beginning balance of direct material plus the new direct material.
Yeah. And so if you have the beginning balance of the direct material and you have the purchases, so that part is the direct material available for use. Right? So how to get the direct material used? You need to get the ending balance.
You subtract the direct material ending balance.
Right. So this the first box. The formula is in the first box. Right. So the logic, let me repeat, is that we know the beginning balance, right? And then we have some purchases. So together we have the part that's available for use, right? And then at the end of the period, we can also get the direct material ending balance. And then we just need to take that part out, and the rest is the direct material use. Okay, so the logic, if I will use a metaphor, is that I have 2 apples now, and I get 3 extra apples from David, so now I have 5 apples, right? And then after this class, I found that I only have 1 apple left. Then it means that 4 apples are gone, right? Maybe Mary ate it, maybe Jill ate it, right? So that's how you understand this formula. Okay? So let's say if we know the direct material use, and then our next question is how many products are fully manufactured so that they can be moved out from the working process to the finished goods. So our next step is to calculate the cost of goods manufactured, right? And then how do you calculate that? Okay, it seems that you guys didn't do the review. Okay, everyone looks puzzled. Yes.
I have a question. Can you go back to the
Last slide, this one.
yes, what is B?
Okay, beginning balance. Beginning balance. And EB means ending balance.
Alright, thank you.
Okay. Jill.
You take your work in progress beginning balance, you add it to the DM used that you got before, and then you add direct labor, you add manufacturing overhead, and then you get total cost of manufacturing.
Yes.
And then you take that total cost of manufacturing subtracted by the ending balance of work in progress.
Yeah,
Gives
so
you-
exactly, right? So the process looks very complicated, but the idea is the same. So we need to have this beginning balance of working process, And then what did we add? We add the materials that we just calculated, right? And then we add the new labor, the new overhead, right? So that part, the total part, is what we call total manufacturing costs. And then if we know the ending balance, we just need to take that part out, and then the rest is the cost of goods manufactured. Okay. And then if we know this part, we can calculate the cost of goods sold using the same logic, right? So we have the beginning balance of the finished goods, and we have the newly manufactured products, and together they will, that part is the cost of goods sold, cost of goods available for sale, right? And then we take the ending balance of finished goods out, and then the rest is the cost of goods sold. Okay, so this process, I think you need to put your effort to understand and know how to apply, right? And last time I asked you guys to upload the Excel project on the discussion board, right? And I checked, only half of you did that. But I suggest that you do the practice on your own, because on the first exam, there will be a similar question in there asking you to fill in the blanks. Okay, so take your time to do that, and I can tell you that I'm going to test the manufacturing firm, the difficult part. So you should know how to do that by yourself. And I have already uploaded the solution in the course document. So you can compare your solution to the answer that I posted. Okay. So that's for the chapter 16. And so today we are going to start a new chapter, the job order costing. Hopefully today we can finish the first two learning objectives. So the first one, we are going to differentiate between two cost accounting systems. So the two cost accounting systems are the job order costing and process costing. And then we are going to learn how to make journal entries of some transactions in the job order costing system. Okay. And by the way, if you want to talk to each other, you can go outside and discuss. Okay? And if you have any questions, just stop me. And sometimes I speak too fast. Just stop me if you feel I'm going too fast. Okay? So the job order costing and the process costing, they all belong to cost accounting systems. So what is this cost accounting system? By its name, it's just an information system that measure, record, and report the costs. Right? So for this one, you don't need to remember the definition. I just need to show you what that is. And chapter 17 is about the job order costing, which is one of the cost accounting systems, the traditional cost accounting system. And the next chapter, chapter 18, is about the process costing. Right, so today our focus is on the first one. But let's first differentiate between job order costing and process costing. So a job order costing system, by its name, it accumulates cost by job. Okay? So what do I mean by a job? A job is the production of a unique product or a specialized service. So I highlighted the word unique and specialized. So if a company is providing a specialized service, for example, law firm, accounting firm, right? Or if they are making unique products, for example, if they receive tailored order, right? For example, some wedding cake, some wedding suits, right? So those are unique products. So the job order costing system is used by this kind of firm, right? So the firm which produces the unique product or delivers specialized service. So besides the example that I list here, law firm, what other examples can you think of which will use the job order costing system? Yeah, Esther.
Custom
Jewelry. Custom jewelry. Yeah, she gave a definition of this jewelry store. It has to be custom. Yeah, that's a good one. What else? Yeah, Abdurrahman.
So as an example, Tesla.
Tesla. How? Why?
Because they only do cars by order. So you need to order the car, and within 2 years they will deliver it to you.
So, is this car a specialized car? Like you can design using your own style?
Yep.
Yeah, if that's the case, then yes. What else? Yeah, that's that.
Suits, like custom suits, like
Yeah,
a
because
tailor.
you need to go to the tailor, right?
Yeah.
And the tailor will measure your height, waist, right? Yeah, that counts. Yeah, that doesn't.
bakery that does like custom cake designs.
Customer,
Custom cake designs for.
yes, yeah, that's a good one. What else? Victor.
Barbershop.
Barbershop. Yeah. Everyone has a different like head shape, right? Those are good examples, right? So as long as the firm is making some unique product or delivering specialized services, then it's highly possible, or in most of the case, the job order costing system is used in this kind of firm. Okay, so that's job order costing system. And we have another cost accounting system, which is called the process costing. And we're going to talk about it in detail in next chapter. But we need to first differentiate between the two. Okay, so a process costing system, unlike job order costing system, which accumulates costs by job, this costing system accumulates costs by process. And what kind of firms do they use the process costing? So basically, the types of firms are manufacturing unique products. For example, the water, right, the bottled water. And if they deliver, through a series of uniform procedures. So coming back to my example of the purified water, right? So the water, the bottled water are basically the same, and the procedures of manufacturing the bottled water are uniform. For example, you need to purify the water, you need to package it, right? You need to use bottling, right? I don't know the terms, but the procedures of the production are uniform. So what other examples can you think of that use the process costing system? Jill.
A car manufacturer when they don't make a special order car.
Right, when they make a batch of homogeneous products, right? Yes.
Nike and shoes.
Yeah, that counts, yes. For a special, for a homogeneous batch of shoes, right? Yeah, Megan.
Clothing, like mass clothing production.
Yes.
Utensils,
Uh,
like spoons and forks, like plastic spoons and forks.
yes, that counts. Yeah.
With like chocolate.
Chocolate. Yeah, that makes sense. Yeah, so you can think of many firms that may use the process costing system. Right? So as long as they produce a batch of homogeneous or identical products. So now that I think you guys had a good grasp of those terminologies, so let's see how to, wait. I think I need to, today. So what kind of cost accounting system would an advertising agency most likely to use? Okay, so that's the first one. Channel 41. So it's the default channel number.
Professor,
Yes.
if we don't have our, we're not gonna get it until Friday.
Yeah, so as I said, I only accept the clicker answers through clicker, right? So if you haven't prepared your clicker, it's also fine because you will get the full credits for clicker as long as you get 80% or above correct. So it's fine that if you miss the first chapter because you still have a lot in the following courses. Yeah.
But you're start counting from today, right?
Yes, we start to count from today. And I checked from the system, you still have 4 students whose clickers are not valid. Okay, so you just make sure that you get it prepared. So is everyone in? What's the problem? Why are you talking? Okay. Everyone in? We're good? Okay. So, can someone who chose C tell me why do you think a process costing might be possible? Who chose C? So for people who chose C, you are saying that advertising agencies might use both, right? Yes.
Actually, there's some advertising agencies where they specifically focus on like billboards, for example. And billboards now you need to focus on every campaign is totally different. Whatever requirements they're asking for is different. So it's basically like a job order.
Yeah.
And at the same time, there's some companies where they just do the same campaign over and over again. That's why we consider it as a process costing.
Okay. Yeah, that makes sense. That's why here I put the most likely, right? So most likely the advertising agencies are dealing with special orders, right? But yes, it happens that they may have some homogeneous advertising orders, but maybe that's not their major part, right? So if you chose C, you still get 1 point, right? So that's fine. But yes, you get your point. Here we are saying the most likely. Okay. So yes.
Can it ever be process costing if it's like a firm that only provides services?
Right. So in the textbook, okay, in your textbook, the definition of the job order costing or process costing is saying that they are used to accumulate product cost. Right, that's not like an accurate way of saying things because they can also be applied to service firms. That's why I dropped the product cost, the product, right, in my slide. So the idea is that because the textbook is focusing on the manufacturing firms, but in reality we have more than that, right? So those cost accounting systems still apply to service firms. That's why it applies. Okay. So this one, okay, and I want you to choose the most likely. So keep your mind simple this time. Yeah, so this time, I think most of us understand, right? So let's say iPhone, right? Apple, they produce iPhone X, XS, XR. So for each batch, they are kind of homogeneous, right? And I put the word most likely. And as I said, they may accept some special orders, but it's not their main product line, right? So here we choose the one that's most likely. Okay. So now that we differentiated between the two cost accounting systems, and now I'm going to introduce the 4 steps that both accounting systems, both cost accounting systems, accumulate track production costs. Right, so here, let's come back to the manufacturing firm. So the 4 steps, I will just first give you a holistic view of what the 4 steps are, and then we're going to understand the steps by showing you some examples. So the first step is to accumulate, and it's easy to understand because it means that we just accumulate the product cost incurred in this manufacturing firm. And then assign means we assign the direct costs to the product. So the direct product costs are the direct materials and direct labor, right? And then the allocate means the allocation of the overhead. So why do we allocate overhead is the topic that we are going to focus on in next class. And after we do the allocation, at the end of the period, we are going to do adjustment on the overhead. And how to do that, I will also introduce in the next class. But for now, we just need to know that, okay, we have the 4 steps, okay, but you don't need to remember, what are the 4 steps, but you just need to understand, okay? So now, if we are in a manufacturing firm, and if we are using the job order costing, okay, which is the theme of chapter 17. Now let's look at how the flow of the product cost going through in this manufacturing firm. So the first step, right, we need to accumulate the product cost, which contains the direct material, direct labor, and overhead. So first we have all those product costs accumulated. Okay, so that's the first step. And then the second step and the third step is to assign the direct costs to the jobs, to the working process. And we allocate the overhead to the working process. And now you may ask me, why do you use the word assign to the direct cost and you use the allocate, the word allocate for the overhead? So the reason, actually the 2 words has the same meaning, but in this context, the assign means this assignment of direct costs. So as we mentioned, the direct costs are easily traceable to the products, right? So we use the word assign. It's like I assign a homework to Rafael, right, or to Sam, because I know who they are and I just assign the work to them. And we use the allocate, the word allocate for the overhead is because the overhead is an indirect cost, right? So for example, I have some candies on my hand, which is not true, but let's imagine I have. And now I want to allocate it to each one of you, right? So that's called allocate. I don't mean that I give 3 to David, I give 2 to Mary. I mean that I just allocate it maybe evenly throughout everyone. I give it to everyone, right? So here, there's just some differences in the wording, but that's not very important, right? So here, it just means that we assign the direct costs to the working process and allocate overhead, which is indirect to the working process. And now, if the working process, let's say the job number 2 is finished, it will be moved from the working process to the finished goods inventory, right? And then if we, let's say if we sell one of the jobs in the finished goods inventory, let's say job 1, then it will be expensed in this cost of goods sold account. Right? So that's how the cost flow. But we have a last step, which is at the end of the period, we compare the allocation calculation of the overhead with the actual overhead, and then we make adjustment. Okay, so now you may get confused, but I will just go to the details later, one by one. Okay, so now you just need to know, okay, we have those procedures, but it's normal that you get lost at this point. So the next learning objective is that I will show you how to record the related transactions in the first two steps, in the accumulation of cost and the assignment of cost. So that's the second learning objective. So let's imagine that we have some T accounts here. Right, so let's imagine this is the T account for the raw material. Do you still remember the T account? Okay, so we have T account for raw material, for wages payable, for the overhead, indicating the, okay, I'll just show you on that one. So for the first step, for the accumulation of the cost, so how do we accumulate the raw material? We will have more raw material when we buy them, right? So let's say now we purchased some raw material, right? And then the purchase will increase the raw material so that we debit or credit this account. Which side? Debit or credit?
Debit.
We debit it, right? Because the raw material is an asset account. So to increase it, we put the purchase amount on the debit side, which is the left-hand side, right? So that's the purchase of raw material, and that's how it will impact on the T account. And now, if we use part of the raw material to make our products, let's say I use direct materials, direct raw materials. So if I use the raw material, it should increase or decrease the raw material? Decrease, right? So which side should I put the use of material on this T account?
Right.
The
Credit.
credit side, right? Yeah, because it means I decrease. And let's assume that the decreased raw materials are direct raw materials. So we classify the direct material, so the direct material will be directly contributed to the working process. And so here, at the same time, when we credit the raw material, we will assign the direct material cost to the working process directly, because that part will go into the working process directly, right? So that's what will happen when we use the direct material. So for this part, do you have any questions? Okay, so when we use the direct materials, we will have a decrease in the T account of raw material, and this raw material will be directly contributed to the working process, because the raw material is, the direct material is part of the product cost, right, which will go into the working process. So that's for the raw material. And now let's imagine we have some direct labor cost incurred, and we pay the workers on account, right? So if we have those labor costs incurred, what will happen to the wages payable?
Debit will
We
increase.
have more wages payable, right? But on which side should we put amounts to? Yes, Victor.
Credit side,
Credit side, why?
because you have to pay to get it, it's an expense.
Is it an expense or liability?
Oh, like.
Yeah, it's a liability account, right? So for liability account, it's on the right-hand side of the equation, right? So to increase it, we credit it, right? I hope you still remember what you learned in financial accounting. So if we incurred some direct labor, right, we have more wages payable, which means that we need to credit this amount on the which is payable T account. And at the same time, we need to increase our working process by the same amount, because the direct labor will be going into the working process directly. Okay, so that's what will happen if we have direct labor. So now let's imagine we have some indirect materials and indirect labor incurred. Okay, so same as before, we will reduce the raw materials by the amount of indirect materials used and increase the wages payable by the amount of the indirect labor used. Okay. So this part may be a little bit confusing, but later we are going to use some examples to illustrate those procedures. And the tricky part here is that once we have indirect material or indirect labor cost incurred, they will first be accumulated in the manufacturing overhead account, because the indirect labor and indirect materials are considered as overhead cost, right? So instead of going to the working process directly, they need to first reside in this overhead account. Do you understand what I said just now? Okay, because the indirect material and indirect labor, they are overhead costs. So they need to first become overhead costs, right? So we first need to record them as overhead. And the reason why I debit them in the overhead is because overhead is an expense account, right? Okay, so if overhead is an expense account, according to your financial accounting, it should be on the which side of your equation? On the right hand side, right? Within the equity account, right? And in the equity, it should be on the expense. So you can think, okay, there are many tricks over there. So if we have more expense, we still increase it by debiting it, right? So here, the key part, as I said, if we have indirect materials or indirect labor incurred, we debit them in the overhead account first. Okay? And that procedure is called the accumulation of the overhead. So besides the indirect material and indirect labor, we also have some other overhead which may incur during the period, and you also need to put them on the debit side of the overhead. And the allocation of overhead happens later when we allocate that part to the working process. So that's a holistic view of what will happen to your T accounts when we have transactions of purchasing and use of materials, use of labor, and allocation of overhead. But for you to understand, we should use some examples, right? So now let's practice. So the first example is the purchase of materials. So now let's see what example do we have. So it says that this firm, it makes some equipment for the gym. And on the last day of August, they have 30,000 of raw materials in the inventory. And they have some outstanding payables of 17,000. And the second information is that during September, the firm purchased some amount of raw materials on account. So now the question is, we want to record the entries for the transaction of this purchasing raw material in September. But I want you to answer what does this 30,000 of raw materials mean at the end of the August. So at the end of the August, you have this much raw materials in inventory, so it means it's your ending balance in August, right, in turn for the raw material. And it also means that it is your beginning balance for September, right? Do you still remember that concept? Right, the ending balance of last period will be carried over to the next period as the beginning balance, right? So here, before we do the journal entry, we can put some information on this T account, right? So for the raw material, at the beginning of September, we have some beginning balance, which is left from August, right? So that's where this 30,000 raw materials sit in this T account. And also, we have information saying that this firm has some outstanding accounts payable, right, at the end of August. So that part will also be the beginning balance from September, right? So, and also the accounts payable is a liability account. So if we have some positive amount outstanding, it means that the beginning balance should be on the credit side, right? I hope you still remember because I feel you guys look really puzzled. So I guess if you forget about those basic things, I think you should review a little bit of the financial accounting. Okay. So now we need to make the journal entry of the purchase. So who can tell us how do you make the journal entry of this purchase of raw materials? Okay, Victor.
So then you would put raw materials on the top, and then 30,000 on the credit side, and then below you would indent, and you do.
Yeah, just tell us first which account will increase.
So raw materials will increase,
Yeah, because we purchased the raw materials, right?
and cash will decrease.
If we pay by account, on account, then
Oh, then accounts payable.
yeah. So if we pay the raw materials on account, so first of all, we will have an increase in raw materials, right? Because we purchased them. And because the raw materials are asset account, so to increase them, we debit them, right? So the first one is a debit of the raw materials. And because we purchase them on account, we will have more accounts receivable, payable, right? And since accounts payable is a liability account, we increase them by crediting them. Right? So the next one is to credit the accounts payable by the same amount. And here I just want to put those amounts into the T accounts. So as I said, we increase the raw materials by this much. So we add them to the debit side of the raw material. And also we have an increase of the accounts payable, so we credit them in the T account. Right? So the first step, journalizing the purchase of materials should be fine, right? So I think everyone should be okay with it. Yeah. Question? Yeah.
Why are you separating the team? Like, why are you making two team deals?
This one and this one?
Yeah.
Because that's separate accounts. So what do you want to? So what do you mean by separate?
Usually, how we do debit and credit. Then, what is debit? It's the raw materials is debit, and account payable is credit.
Yeah, that's
In
what
one
we
table.
did here.
In one table, not in two tables.
One table. What do you mean by one table? You mean here? You mean this one?
No. So like one T, then raw materials, as a debit, and and account payable as a credit.
I think that's just it's a matter of form, but here I want to separate it so that, yeah.
Isn't it because one is assets and one is liabilities, so you have to have assets, liabilities, and expenses,
They're two
equities
separate.
in separate ones?
Because
so-
I haven't seen a combined table as you said, but if my understanding is correct, then I think Dima is answering the question because they are two different types of accounts. The raw material is an asset account and accounts payable is a liability account. Yeah, Gio, you want to say something?
Oh no, it's just, I mean, for each account, they have to have a debit and a credit, so
Yeah.
they need to be separate.
Yeah, because I don't really understand your question, but I guess they are right. Okay, so now let's do a clicker check. And so some people ask me, do I need to buy the textbook, right? And the answer is yes, because I mean, you come to this class, I will try my best to deliver most knowledge that you need, but it doesn't mean that you do not need to read the textbook, because I think the best way to learn this class well is to combine what I said in class and also what's in the textbook. Because I personally feel that the textbook is sometimes very clear and structured, right? So it can help you understand the material. And as for the edition, you can actually use the past edition. It doesn't matter because the managerial accounting concepts hasn't been changed that much during the last decade. So you can use the 4th edition, 5th edition, depends on you. But just make sure that you have the latest edition for the My Accounting Lab, right, to do the homework. Right, so when we purchase the materials, no matter whether they are direct or indirect, we still just have an increase in the raw material. Right? So we debit the raw material as a whole. Yes?
Yeah, and it was also in the slides from before, you had the raw materials and the accounts payable, and the debit was raw materials. And it said which one was debit.
So it assigns the cost by debiting. Right? So debiting, you choose did you choose the accounts payable?
That's that I picked.
Oh, you picked it. Okay. So some people choose A and C. So A, because we credit accounts payable, right? So that's yes. So that's easy to understand. And then for C, manufacturing overhead. So we haven't got that far. So till now, we are just talking about the purchase of the material. So you just need to increase your raw material and then credit the corresponding account. Right? So if you pay by on account, that's accounts payable. If that's cash, then that's cash. Right? So that's the first step. And then, so are we good with the purchase of material? If not, just make sure that you review the slides and then read the textbook again. So now, let's come to the second part, which is the usage of materials. So let's say in September, this firm used a total of 129,000 of materials, of which some part is the direct material and the rest is indirect material. Okay. So in the cost flow chart that I just showed you, if we use the direct material, we will have an increase in the working process directly, right? Because the direct material cost will go into the working process just directly. Yeah. But if we have some indirect materials, this cost will be accumulated in the which account? In the overhead account. So, okay, everyone looks very, very puzzled, which is very surprising.
I have a question.
Yes.
What does job 2 signify?
This one?
Yeah, job 2.
Yeah. Yes. So here I just give you one example. It can be job 1 or job 3, but it doesn't matter. So
Oh,
here, yeah.
Okay, so it's just like to categorize.
Yes. Yes.
Okay.
So let's say. So how do we journalize this transaction? The use of materials. We have both direct material and indirect material. So let's first consider when we use the raw materials, we will have an increase or decrease of raw materials. We have a decrease, right? So we can first do the credit side, right? So we have a decrease in raw materials, so we have a credit of raw material of this total amount, right? And now let's think about the debit side. So the debit side, first we use the direct material to make to contribute to the working process, right? So we have an increase in working process. And working process is an inventory account, which is an asset account. So we will have a debit of the working process, correct? Because the direct materials will be going to the working process directly. So now we have one debit there. And think about the indirect material, right? So when we have the indirect material cost incurred, they will first go into the manufacturing overhead, right? And manufacturing overhead is an expense account, right? So we have an increase in the expense account, so we also debit it, right? So now we have a balance, credit and debit, right? Do you have that in your mind? Right, so first we have this credit of raw material inventory because we use the raw materials, right, in a total amount of 129,000, right? And among this amount, we have direct material, which will be going into the working process directly, right? So for that part, for the direct material part, we will have an increase in working process for that amount, right? And then for the indirect material, they will first become the overhead overhead cost, right? So we debit that part. And now you can see that the debit and credit are balanced, right? So any questions? Who still feel confused or so who understands? Who do not understand? What about those who remain open? It means that you either understand or either you don't understand. Okay, I guess you are just sleepy. Yeah.
What about the 41,000? What are we going to do with that?
This one, yeah, I will talk about it later. Yeah, but thanks for pointing that out. Yeah.
So,
Oh, sorry, Megan first.
for any direct materials, would it go into like either of the three inventories, depending on like what stage it is in the manufacturing process?
You mean the working process?
Yeah, like if it was like finished goods, would you also debit like with direct?
For the finished goods, we won't use this step because when we are using the direct material, it goes into the working process first.
Okay.
Because it will first be in production, right? And when we will come to the finished products in a minute, and then you will see it's not directly related to the direct material.
Okay. Now what about the one before working process?
The one before working process, that's the purchase of the material.
Oh, okay,
right?
okay.
Yeah. So now you can just imagine the flow of costs, right? So we first buy the raw materials, and then we use them, right? And then when we use the materials, we consider whether it's direct or indirect. If it's direct, we increase the working process in the same amount as the direct material. And if that indirect material, we increase the overhead cost in the same amount. Right? So any questions so far? Yes.
So when you say work in process, isn't it technically being used? So why would you debit it?
Because we increase it. Because work in process is an asset. Right? So you increase your asset, you debit it. Okay? Okay. So Abdurrahman is asking what do we do with this ending balance on working process of 41,000 at the end of August, right? So at the end of August, the ending balance of the working process will be carried over to September as what?
Beginning balance.
Yeah, as the beginning balance, right? So that's why in the working process T account, we put the beginning balance on the debit side, right? Because we have a positive outstanding, it has to be positive, right? We have some outstanding of working process inventory. So that's how we use that information. And for the raw materials T account, so the first one is the beginning balance from the previous step, and then this 135,000 is the purchase amount from our first step of purchasing, right? So all those examples that I show here are from the same story. So if you can look at my slides, you can figure it out. So every number is connected. Okay. So now we already have the journal entry, and we want to put them into the T accounts. So what do we do? Okay. So first, we debited the working process inventory. So what do we do with this number to this T account? So.
Can you repeat the question again?
So now I want to put some numbers into the T account of working process. What do I do?
So you
Wait, someone else raised their hand because sorry, no, yeah.
You would put it on the left-hand side of workers.
Left-hand side, the debit side, right? Because here we have a debit of working process. We increase the working process, right? Yeah, that's right. Wait, I'll come back later, but that's right. And what about the manufacturing overhead? What do we do with the T account? Anyone else? I'm gonna do a cold call, I guess. So, okay. Sido. Sido-sama. Yeah.
What was the question?
How are you going to put the debit amount of overhead into the T account of overhead? So now we have the journal entries, right? And now I want to see how the journal entries will impact on my T account. And look at the overhead. So now the overhead is empty, right? And now we have those transactions. How will that impact on my overhead?
This is debited.
You debit it, right? Yeah, because here we debit it. And which side? Yeah. Yeah, that's very simple, right? And then for the raw materials, because we used them, we credited, so we put a credit amount here, right? And that's the use of materials. And now, this little question is what I need you to do right now. And be careful of the underlying words, okay? Because this will be different from the next example that I will show you. How many courses are you taking each semester? This semester? 5.
Six.
Why? How can you manage that many? And you are doing part-time job.
Full-time job.
Full-time job. That's crazy. You cannot do that.
Don't make sure you think you don't want to do.
So full-time job is that you go, you work how many hours a day? 8 hours a day. 10 hours a day. How can you manage your coursework?
No, I
Taking
don't.
6.
I work like 8 to 8.
Okay, now I can find some reasons for the poor performance of the managerial accounting. No.
I take off Monday, Tuesday, Wednesday, and I work 10 hours, 4 days a week.
Okay, good, right? So when we use the direct materials, it will go into the working process directly, right? So you debit working process. You guys have any questions?
Like, don't get me wrong, my job is consultant, so like these days where I
Yeah.
finish only 4 or 5 hours.
Yes.
It's an
It's full-time,
entire
but
material. It's gonna be manufactured.
yeah, I mean, if
That's the next
7
question.
years,
Okay.
so
So next question, if it uses indirect materials, which account are you going to debit? I think still waiting for six people. Okay, one more. Right, so if we use the indirect, they will first become overhead cost, right? So we debit the overhead. So that's good. So that's the use of the materials, right? And then we differentiate how we journalize when it's direct material and when it's indirect material, right? And similarly, we are going to look at the use of labor. So now in September, we have some labor costs incurred. And among the total number, among the total cost of labor, we have some part of the direct labor and some part of the indirect labor. Okay, so the same logic applies here. So if we use the direct labor, we debit or we increase the working process by the amount of the direct labor, right? So our first debit is this working process. The amount is same as the direct labor because the direct labor contributes directly to the working process. And if it's so for the indirect labor, the same logic also applies, right? So they will first become the manufacturing overhead account. So we debit that account by the amount of indirect labor. Okay. So because we used all those labors, right? And imagine that we pay the workers on account, so we will have more wages payable, right? And more wages payable means that you credit them because the payable is a liability account, right? So here you credit the wages payable by the total amount of the labor cost.
So since it's going into work in progress, does that mean like whatever labor you spend is considered an asset?
Yes, yes.
Okay.
And that procedure is called inventorize. Yes.
So like wages payable is kind of under accounts payable, or it's a totally different?
It's a different one, right? Accounts payable, yeah, it's a different one, but they all belong to the liability. Yeah. Okay? Yes?
So is manufacturing overhead and work in progress, what accounts are they? Are they assets?
So work in process is an asset account. And overhead, manufacturing overhead is an expense account, right? So the interesting thing is that for expense account, although it is on the right-hand side of the equation, you increase it by debiting it because it is on the right-hand side of the right-hand side, right? So you cancel each other, so you have the same effect. Yes?
I don't get that. So it's an expense account, but we're debiting it to increasing it?
Yeah,
To increase it?
Yeah, so I will show you the, so that's the what is that? Fundamental of the financial accounting, right? So we have the asset equals to liability plus equity, right? And under equity, we have the revenue and expense, right? Is this right? So for the asset account, you increase it. So this side is increased, right? Debit means increase. Credit means decrease. Right? And for the equity, it's the reverse, right? So you increase it by credit it, and you decrease it by debiting it. And for the expense account, because you have a minus here, right? So to increase it, it goes back to this side because you have a minus here, right? So that's why. And I think on your financial textbook there are more explanations, but I will just stop here. Okay. So if we are going to look at the impacts of the T accounts, right? So we have so for these two, they come from the previous step, the step of use of material. So now we have extra working process. So we increase it by putting this amount on the debit side. And for the overhead, we have extra, right? And then we also put this amount on the debit side. And for wages payable, we just increase it by crediting them, right? By crediting. This is the liability account. So now, this clicker question. So if they use the indirect labor, which account should you debit? So I just did a survey, right? And I guess only 10 students did the homework. And I urge that you start early because you never know what will happen when you are arriving the exam day, right? Because every exam might be on the same week, right? So I don't know how you can manage that. And also, as I said, doing the homework is a way for you to practice and review. And the earlier, the better, right? So if you still remember the memory curve that I showed you in the first class, then you should have some motivation to do it early. Yeah.
Where can we find the videos?
The video of what?
And YouTube channel?
Yeah, I think they are still editing, right?
So they're not up yet?
Yeah, it's not updated. I will tell you when the video is up. Okay, so now let's see. Okay, so now you guys master this. And what about this one? So if they use direct labor. waste. Okay. Yeah, so if we use the direct labor, it goes into the working process directly. Okay. So we're going to touch the very first part of the third learning objective. So it's the allocation of the overhead. Thank you. But first, let's see what happens to the overhead account till now, right? So if you still remember, we discussed three types of transactions, right? We reviewed the purchase of materials, the use of materials, and the use of labor. And in the process, we accumulated manufacturing overhead by adding the indirect materials and indirect labor to the overheads, right? So that's what we covered till now. When we use the material, when we use the labor, we have the indirect part, and that part goes into the overhead, right? So that's the current story. But as I said, besides indirect material and indirect labor, we still have some other overheads, right? So now let's first journalize the other overheads. So these three transactions are related to the other overheads. So first, the factory utilities, this much. And then the use of insurance. So here, the term is prepaid insurance, prepaid factory insurance, and also the factory depreciation. So let's first look at how we journalize the use of factory utilities. So first, let's imagine the utilities are paid on account, right? So we will have some payable, and we call it utilities payable. So the factory utilities, by our classification, it should belong to the manufacturing overhead, right? So we will have an increase in the overhead. So obviously, we are going to increase it by debiting it, right? By the amount of utilities. And because we pay the utilities on account, we will have accounts payable, right? Utilities payable. So we are going to credit the payable by the same amount. And if we're going to put them into the T account, we just need to put them to where they belong to, right? The credit goes to credit, debit goes to debit, so that's fine. And about the prepaid factory insurance, so here the tricky part is, so let me ask you, what type of account is this prepaid factory insurance? Asset, right? Correct, thank you. You still remember, great. So let's say usually the firm will pay the insurance for the factory at the beginning of the year, right, for the whole year. And after each period, the insurance, the asset of this prepaid insurance will be reduced, right, will be expensed period by period. So in this case, it's talking about this. So first, we also need to, so it's factory insurance, and of course it is overhead, right? So we will have an increase in overhead and also a decrease, right? The reason why we put credit here is because we have a decrease in the asset, right? We have a decrease in the asset of prepaid insurance, right? So we also need to put the same amount there, and yeah. And for the factory depreciation, so what type of account is that? Depreciation, what type of account? It's assets. And one tricky thing or one special thing about depreciation is that it's called a contra account. So it means that whenever you increase your depreciation, it is decreasing your assets, right? And we're going to talk about it next time.